Welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. We've got quite the lineup of global developments shaping markets: Trump-Putin talks on Ukraine, renewed banking sector anxieties, and a surging gold market. Let's dive in.
Thanks, Maya. Yes, geopolitical headlines are dominating the wires. Trump and Putin are set to meet in Budapest to discuss ending the war in Ukraine, with Ukraine's Zelensky meeting Trump beforehand. Meanwhile, U.S. regional banks are under pressure again after revealing loan fraud losses, an echo of past crises.
And speaking of precious metals, gold is having a banner year, up 65% this week alone, hitting record highs. How do you interpret this rally, Eli?
Gold's performance reflects investor flight to safety amid geopolitical uncertainty and banking instability. With gold at all-time highs and Brent crude down 3%, markets are clearly pricing in a risk-off environment. Investors see gold as a hedge against potential economic turbulence.
Let's shift gears to technicals. We're seeing strong bearish momentum across several crypto assets. For instance, SUI Tether on the daily chart using the stochastic relative strength index strategy shows both K and D lines declining below 50, confirming short-term bearish control. What does that mean for traders?
The stock RSI here tells us that selling pressure remains strong but isn't yet extreme. With readings approaching oversold territory, there may be room for a bounce, but only if supported by volume and price action. Traders should watch key Fibonacci levels closely.
Switching to Avalanche Tether with a Fibonacci retracement view, we're looking at price hovering near the 61.8% support level. If it holds, could we see a reversal? Or is more downside likely?
That 61.8% level is indeed critical. It often acts as a magnet for reversals. But given the broader downtrend confirmed by moving average convergence-divergence and on-balance volume, I'd lean towards caution. A break below would open the door to deeper corrections toward the 50% FID level.
Now let's talk stocks. Nvidia has been volatile lately, especially with AI boom expectations. On a 4-hour trend analysis, we're seeing lower highs and lower lows, suggesting a clear downtrend. Volume spikes confirm strong selling interest. Should investors brace for further declines?
Absolutely. Despite the long-term AI narrative, short-term technicals paint a bearish picture. That consolidation near recent lows suggests sellers are still in control. Unless we see a convincing breakout above resistance around $185, the path of least resistance remains downward.
Finally, Bitcoin, still the bellwether. The Pi cycle indicator shows no signs of topping, but our daily buy-hold-sell model signals sustained bearish momentum. Where do you see Bitcoin heading next?
Bitcoin remains caught between narratives. While the Pi cycle doesn't flash any warnings, technical indicators like moving average convergence-divergence and on-balance volume underscore continued selling pressure. Until buyers reclaim the 50-day simple moving average, which currently sits around $114,000, I expect sideways to lower movement.
To wrap up, watch for developments from the Trump-Putin summit. Keep an eye on gold and oil dynamics, and monitor those key technical levels across cryptos and equities. Thanks for joining us, Eli, and thank you for watching. Stay informed, stay safe.